Hello, everyone. So I'm really excited to be here for a couple of reasons. One, and my kids said to say this, I spent quite a bit of time at MIT. This is my 20th reunion year. So I graduated from here, grad school in 2005. And I always loved being in Boston. My oldest born, Owen over there, oldest son, was born in Boston. My middle child, Maya, and they're killing me for pointing them out, goes to school in Northeastern, and my youngest will maybe go to Boston at some point in time. So I just love being at Boston. So I think I have more Bitcoin on me, physically, I know that's sort of a weird idea with Bitcoin, than anybody else in this room. And strategy, I guarantee, has more Bitcoin at 528,000 than anybody else in this room, maybe even combined. So I love Bitcoin. So that's the reason I'm here. So we're going to talk about Bitcoin for corporations. I know you just heard a conversation around why corporations shouldn't have Bitcoin and all these kinds of things. But I'm going to tell you why I think it's quite important for Bitcoin and for companies to have Bitcoin. And I think I might be uniquely qualified to share with you my views on this. First of all, corporations. Some of you are sitting here. How many folks in here are students? Raise your hand. All right, like 20, 30%. How many work for a corporation or run a corporation? Okay, it's probably the other 80%. I have a few statistics up here just for you. There are, and this is just US, the numbers in the world are hard to find. There's about 35 million corporations in the US. And we as corporations employ about half of all the workforce in the US. We have about 28 trillion in revenue, which is roughly the GDP. That's how the GDP of the US is created, is through corporations, and about 4 trillion in cash. Right? And then you talk about, okay, what about a publicly traded company like Strategy? What do we have? Right? There's about 5,000 publicly traded companies in the US, employing about 40 million people, 16% of the workforce overall, 22 trillion, so you can see quite a bit of the overall GDP comes from public companies. And then let's narrow it down a little further, the S&P 500, right? 500 of generally speaking, the largest companies in the US, of which Strategy is not included on it, even though we're about 120th largest company in the US. About 29 million people. Again, a very large portion of the workforce is employed by the S&P 500, 12% of the people, 18 trillion of the revenues. So more than half of the revenues, right, half of the GDP of the country comes from the S&P 500. So for those who are like, hey, corporations aren't important when it comes to Bitcoin. Corporations are absolutely important when it comes to Bitcoin, right? The country is run by companies. The country is employed by companies. Corporations are fundamental to the success of Bitcoin. But there's something fundamentally wrong with companies in the US, right? 35 million companies, 5,000 publicly traded. None of them really perform. If you think the bar, right, you can all go out there and invest in the S&P 500. If you think of the bar of performance is the S&P 500, and that's what most people said is, okay, is your investment working or is your investment not working? People think of the S&P 500 as 11%. The Russell 1000, the next 1,000 largest companies in the US, don't perform as well as the first 500. The Russell 2000, the next 2,000 biggest, perform half as well as the S&P 500. And the rest of the companies that employ everybody else basically runs with GDP, 2.5% growth. So anyone's like, oh, companies are doing well, companies are doing great. Well, you hear, well, the Magnificent Seven's doing well. The S&P 500 sets the bar. Almost every other company is not performing. So what did I learn while I was at MIT? Right? What did I learn? I went there for business school with the idea of learning, and they teach, how do companies do better? How do corporations do better? We can figure this out. I'll save you $200,000, and I'll tell you what they taught us. All right? I'll save you 2.5 Bitcoin. Right? What did we learn? Option one, you can start or you can run a company. In about 2 years, this is what I learned how to start or run a company. Hire smart people, build a great product, acquire customers, retain customers, increase market share, expand margins, maximize earnings per share, reinvest in business, reduce your costs, pay dividends, buy back stock, and then when you're done and you've given up, acquire somebody to grow some more. And then start from the beginning. By the way, that's extremely hard to do, which is why 99% of the companies in America underperform the Magnificent Seven in the S&P 500. This is hard. 2 years of business school, most people don't figure this out. Okay, well, that's hard. Everyone's like, well, how do I create a great product? How do I become the next Amazon or the next NVIDIA or the next Google? And after a year and a half of all this, you're like, this is really hard. Let's try something easier. Let's just manage money. Let's just manage somebody's funds instead. I can work for private equity. I can work for venture capital, maybe a hedge fund, maybe an endowment, maybe a pension fund. That's easier, right? And then after you realize that they only hire 10 people a year, you're like, that's really hard too. I can't get a job doing one of those things. So what am I going to do? I'm going to do what 40% of the people who go to business school do. I make money off of the people in columns A and B. And I become a consultant, which I did for 10 years. I become a banker. You can go work for one of these large banks. That's admirable. And you're just basically selling to these guys. But they teach you all the same principles. This is my MIT transcript. It's a little risky to put it up here. You don't have to put your glasses on. I got like a 3.7 or something like that, mostly A's, some B's. But that's not the point. What did I learn in those classes? 90% of those classes that I took in finance were all about how do you do column A or column B or column C. They taught us all the exact same thing. How do you make more money by selling product? Admirable. That's the American way. And so what ended up happening at the end, when you graduate with a great degree from a great school, you underperform. You can go work in private equity, and they actually found a way to outperform the S&P 500 for the last 10 years, 14%. That's pretty good. Venture capital, you hear about these guys out in Silicon Valley. They're brilliant. They work really hard. You pay them 2% of your 2% of your assets and 20% of the gains for them to perform as if all you did was just put your money in the S&P 500. If you went and worked for a bank, your performance was 9%. People are like, 9% is pretty good. Not one compared to 11% as the S&P 500. You could go work for a services company, right? You can go work for McKinsey or Accenture or Deloitte or BCG or Bain. You'll do 9%. You go work for a hedge fund. These are the quant PhD guys. They're real smart. You do 9% there too, right? Or you can work at an endowment, right? Harvard has a big endowment. Penn has a big endowment. MIT has a big endowment. And they're doing 7%. Brilliant folks investing. Pension funds, where you put all your retirement money, 6%. So after all of that education, all that smarts, you get the smartest people in the country, and all they can do is the S&P 500. So what's the problem? The problem, from my point of view, and the problem from a lot of Bitcoiners' point of view, is focusing on the income statement, group ideology. We've taught every single person the same thing at every single school across the United States of America, good schools, average schools, below average schools, and inertia. If you're going to be taught the same thing, why don't you just do the same thing as everybody else? And of course, the solution to all of this, the solution for corporations, isn't to do the same thing as everybody else. The solution isn't inertia and not do anything new. It's focus on your balance sheet, show a little bit of bravery, and invest in Bitcoin. And so what does that look like? You know, you've probably heard this before. Smart people create wealth by making money off of their money. Your parents might have told you that, right? You might have heard Warren Buffett say that at some point in time. So what does that mean? If you're an individual, you can try to figure out how to make $100,000 a year working at whatever job it is, or $200,000 a year working at an investment bank, maybe $300,000, $400,000. But sometime You want to make your money off of money. 5%, 11% of you invest in the S&P. Everybody knows that. Universities. Guess where universities are not making their money? Tuition. You would think, wow, tuition is rising 20% a year. An undergraduate student at a university is a break-even proposition for the most part. Universities are making money off of their money. Alumni give them money, they create an endowment, and they get their 6, 7% off of that. Imagine if they got more than that. Nations. Right, we talked a little bit about a Bitcoin strategic reserve. Right, we talked about a sovereign wealth fund. How are countries making money? Well, they can make money from taxes, but the really wealthy countries, right, United Arab Emirates, right, Saudi Arabia, they're making monies off of their sovereign wealth funds, off of the investments in the money that they have in their businesses. And so why, if you're a company, wouldn't you do the same thing? If you're a company, you can make money selling things, very admirable, by the way. Everybody buys things, and so I'm not saying that's not a good way, but there's a better way if you're a business. Just like if you're an individual university or nation, make money off of your balance sheet. Makes sense. So why don't they do it? Why aren't companies doing more by investing their balance sheets? Why is 10% of our education at the top schools in the world focused on the income statement and not the balance sheet? Because until Bitcoin, there really wasn't a way, right? What's simplest for a company to do with their balance sheet, with their savings? What's simplest for a lot of you to do? Invest in commodities, right? Invest in a US Treasury bill, right? And for most corporations, it's actually not legal, right, from an SEC perspective, right, to invest in anything other than commodities and US Treasuries. Well, the legal path, the simple path, has been to invest in gold, 10%. That's actually pretty good for the last 10 years. That is not the track record of success of gold for the last 100 years, right? Invest in silver, corn, right? And the worst thing you could actually do is what most companies do with their excess balance sheet, which is T-bills. They don't invest in oil. It's negative 6%. This has been the path for most companies, and this is why they don't look at their balance sheet as a strategic asset, even though all people should, right? Universities do, countries do, is they're not getting the return that they would expect out of that. And so what occurred in 2008 and was started by strategy in 2020 was a way out. Bitcoin's challenging every thought that everyone has ever had in a corporation. And if you look at this, every 10-year period since the inception of Bitcoin, its performance has far exceeded. You can't even see the green line on this, 11%. The worst 10-year period Bitcoin ever had was from 2013 to 23. That was a 50% gain. The best, 223%. This is why you're all sitting here. Obviously, you're interested in the technology, but this is the return. This is the way out. Bitcoin just doesn't give you a way out financially. It gives you a way out of the ideology. It gives you a new independent ideology. Today, corporations run in markets that operate 252 days a year, 6.5 hours a day, 19% of the time. Bitcoin operates 100% of the time. Corporations report earnings quarterly. Strategy shows our results daily. In fact, we update them every 15 seconds on our website. Credit ratings update annually. Credit ratings ignore Bitcoin. Accounting policies update every 5 years. Quinquennially. I like that word, quinquennially. Accounting policies don't work for Bitcoin. So things get a little hard. We have to change things, right? For this to work, and it is starting to work, it requires a new Bitcoin standard. You have to go from traditional capital to digital capital, from US Treasuries on your balance sheet to digital balance sheets, all the way down. We're creating a new accounting standard, right? A new credit standard, a new way of viewing public companies in the world. And so when you do this, what happens? We were, and we are, the best performing company in the United States, strategy, in the last 5-year period, because we found a new way. We stepped out of the groupthink and ideology that they teach at the greatest universities in the United States and all the companies and all the banks and all the consulting groups. We did something different. And not only did we outperform the entire NASDAQ, the entire NASDAQ, the entire S&P 500, the entire Mag 7, but it wasn't even close. And we outperformed Bitcoin. And what happened, strategy became the most performant, the most volatile, the highest volume, and most interesting stock in the United States as a result of our Bitcoin strategy. And you're saying, well, you guys did it. Can everyone else do it? You're going to hear from two of these companies later. Metaplanet did it last year, starting in April. They outperformed us. They were the highest performing stock in the world by adopting a Bitcoin strategy. Semler Scientific did it. They outperformed Bitcoin. They outperformed the S&P 500. And one of the newer ones, Cooler, did it. This is a replicable strategy. So who else should be doing this? Everyone else should be doing this, don't you think? It takes courage. It takes original thinking. It takes independent thinking. It takes bravery. It takes Bitcoin. Low growth, high cash companies should do it. GameStop just did it. Their stocks outperformed everybody yesterday. Right? What about these companies? What about high growth, high cash companies? Right? They could do it next. And if you see this happen, then you realize there is a way out. There's a way to do something different. There's a way to escape what everyone else is doing in the United States. But we're doing what everyone has told you, what your grandfather told you to do. Make money off of your money. Right? I'm sure someone's had somebody in their life mentor them and say the way to true wealth is making money off of your money. So what do I leave you with? You've heard some of these things. As an individual, as a person, what should you do? Learn Bitcoin, spend 1,000 hours if you can, but start with 100. Build your balance sheet with Bitcoin and break free. When someone tells you something in school, in work, in life, question it. Question the status quo, question the ideology. If you're a corporation, educate folks in your team, your executive team, your board, build your balance sheet with Bitcoin, and break free from the traditional models, traditional products, traditional people. And so I thought it was apt that this conference is about freedom. I think what Bitcoin does is it allows corporations to find freedom from the average. And corporations matter for America, and corporations matter for you. So thank you for your time, and I'll take some questions.
Thanks, Phong, for an excellent presentation. Can you maybe share your thoughts on where do you see corporations contributing to the ecosystem of, say, Bitcoin over the next 5 years?
Yeah, so I guess the question was, what do I see happening in the next 5 years? So first, I'm not very good at predicting things. When we started this in 2020, I figured in the next 5 years, between 2020 and 2025, every corporation would have figured out that Bitcoin was the right thing to put on their balance sheet. There are a couple of things that stopped them, right? And a lot of it was risk-focused, right? For companies to put Bitcoin on their balance sheet, there needs to be an accounting standard that allows you to do that. And actually, that changed with a lot of work that we did last year. The accounting standard for Bitcoin now in the US is you get to recognize Bitcoin at fair value. So that was a big change. The second big change is institutional, right? Like a lot of companies, shareholders are institutions. I think the approval of Bitcoin ETFs and BlackRock and Fidelity and major institutions getting involved, that was a big change, and that was the beginning of 2024. And the third big change is regulatory, right? There was a regulatory regime prior to the current administration that was antagonistic towards Bitcoin and towards digital assets, and that's changed. The current administration is very pro-Bitcoin, very pro-digital assets. And I think those risks haven't been reduced really in the course of the last 15 months, opens up the path. But there's another piece, is this ideology of what corporations should be doing. And that's what I'm talking about here. Right? Everyone believes, and I'm a big believer in let's create great product and make money off your product and off your income statement. But we need schools, right? You need shareholders, you need banks, you need consulting companies to embrace this idea that Bitcoin on your balance sheet also helps you unlock. And I think if that changes, you really see an avalanche. But I think the next 5 years are very bullish on more corporations investing in Bitcoin.
Big fan of what you guys have done. One question I had for you is that my understanding of Strategy's accumulation of Bitcoin and its Bitcoin yield metric is that it's partially contingent on the premium the shares trade to the underlying Bitcoin you guys hold. How do you guys look to manage that premium? And adjacent to that question, in traditional finance classes like at MBAs here, they teach you that if you think a company trades at too high of a premium, you should actually start a competitor to lower that premium. Whereas MicroStrategy actually encourages other companies to adopt that Bitcoin strategy. Do you see that possibly compressing the premium those shares trade at going forward?
Yeah, so a couple of pretty deep questions that I could probably talk for the next hour about, but I'm not going to. The first question is for those who follow Strategy and our stock, we trade as a premium to net asset value. And I'll do like 1 minute on this. There's a lot of different ways to value companies, right? Like one way is to do a discounted cash flow of all the future cash flows, right? Another way is to take the sum of the parts, net asset value. And a third, which is a pretty normal way of valuing a high growth company, is a multiple over some income metric. And if you were to take Bitcoin yield and Bitcoin income or Bitcoin gain, right? And if you were to say that we were to have gained $10 to $15 billion of Bitcoin, right? And you were to trade that at a 40 to 50x multiple, I would argue that perhaps using that model, the company should be valued at $500 billion to $1 trillion. So I would say there are different ways of looking at our premium and our valuation overall. Right. So I'll do one more question.
Quick question. You may have answered it in the first question, but the presentation that was given to the Microsoft board, I thought was incredible and so compelling. Where did it fail there? In terms of Microsoft adopting the same strategies? Is it for the same reasons you mentioned a couple minutes ago, or was there another factor that was part of the equation?
Yeah, if you look at, and so there are a lot of reasons why companies with large balance sheets, from my perspective and Strategy's perspective, should be investing in Bitcoin, right? And at a minimum, if you can get an annualized 60, 70, 80% return, then you would argue that's sort of your bar for investment gains and losses. And so you should be looking at that as an option. Now, we have an ideology that I mentioned for the last 30 minutes that doesn't support that. Right? You have boards, you have shareholders, and if you look at the composition of a lot of these folks, right, they work in an ecosystem and they learned at business school or they learned at undergraduate. They learned that the way to make money is off of your income statement, not your balance sheet, right? And so when you present these folks with a new idea, a new regulatory framework, a safe space to do this in, a formula, like I would say the large big tech companies, because they do have strong earnings from their income statements, are the least likely to do something like this. The more likely companies are going to be your Semlers, your Metaplanets, you're going to meet right after this, who need a way out, right? That doesn't mean in the next 5, 10 years that won't change, right? You need somebody who is brave, right? Like Tesla put Bitcoin on their balance sheet. Right, you need some folks who have a controlling share, of their company. You need founder-led CEOs. This is the same case with every technology disruption or corporate disruption. It's not the big companies that lead; it's the small ones. But the conversation's occurring now. 5 years ago, the conversation wasn't even occurring. So I think there's a lot to come here in this space, and we're happy to be a big part of this. Thanks, everyone.
Thanks, Phong.